Hey everybody, Tim Sackett. Welcome to the HR Tech 100 Fund. I have with me my co-founder, George LaRocque. George, how are you doing?
I'm doing great. Hi, Tim. Hi, everyone.
We wanted to put a video together just so we could kind of get to some of the questions we've been having as we reached out. We had launched this earlier this year in terms of the concept of what HR Tech 100 is in terms of being an HR Tech investment fund. And so one of the big questions that came back, George, after we went out to initially 50 people, kind of early people that told us like, hey, like I'm super interested in this, right? And so for those who are seeing this and didn't like actually read anything or see the site, HR Tech 100 is $1 million investment fund in HR technology. Only 100 people, 10,000 each. Do the math. That's $1 million.
Yeah.
And you take away a little bit of expenses. The reality is, the vast majority. This is not a George and I are going to take 500,000 and invest 500. This is literally the most transparent thing. George and I are investors one and two of this. So we're in this just like everybody else. Everybody gets one share. And then when we have all kinds of this stuff on the site. So read that.
Yeah. Yeah.
So one of the questions, George, we had was, well, what's your kind of like your thesis for investing? What's your philosophy of who we're going to invest in and what we're going to invest in? And so we've decided we're going to go pure angel.
Yep.
And so talk to me a little bit about what an angel is when we talk about investing.
An angel invests at what is referred to as, early stage, which also needs a definition. In our world, generally, we're talking about what's called pre-seed and seed, and uh, these are individuals generally. It could be a group of individuals, which is
Yeah.
basically what
A
we're
lot of times you
forming.
see a couple co-founders,
Yeah.
things of that sort. Yeah.
Yeah. And the investments from angels can be as low as $10,000. Gosh, it could even be smaller if somebody was willing to accept that. And sometimes you'll see an angel that might write a check for $100,000 or
Yeah.
something like that.
Or even, yeah, sometimes more. You see a lot of this also, like they do friends and family around, which are
Right.
also, all those people are really angels. And that's when they're like, hey, mom and dad, can I get 25
Right.
grand to pay my bills as I'm building this thing out? A lot of times it's pre-revenue, but not necessarily. Sometimes they're actually making a little bit of money, right?
Yeah.
In whatever they've built. You and I have had this conversation, and it's interesting because we're considered the general partners of this fund, which for all intents and purposes, you just had to have that from a fiduciary responsibility.
Right.
All of the other 98 will be limited partners, but we've designed this that we each get one vote. So we're no, even though we have a different title, there's really no difference for you and
Right.
I, except initially we'll probably bring deal flow. So one of the things that you and I have talked about is like, hey, I would think if we go back 5 years ago, go back to like right before the pandemic, even post pandemic, a lot of angel investors, they would just come to like you and I or anybody that was an investor and go, I have an idea, and they would get money. And we're like, we're not investing in ideas. We want to see some product. Now,
Right.
it might not be the finished product, right? But they've actually put in some bootstrapping to build something that we can see.
Yeah. And at this time, uh, in the market where the barrier of entry is so low and these development tools, I mean,
Yeah.
you might not be able to build something that scales in a few hours, but
Yeah.
you can have a prototype pretty quickly. You
Yeah.
can you can have something tangible, get it out to some design partners, customers, and get something out there pretty quickly. So I really think we need something to sink our teeth into to say,
For
like,
sure.
what is it? What does it do? Now, it may be that you've got this is early stage, this is pre seed and seed.
Yeah.
So part of the opportunity for the startups here is that this group of operators and experts can help point out some gaps and opportunities for products and where they might need to go. But it's 100% product. It's not unusual. I see companies that are raising their seed round. They've got $1 million in annual recurring revenue already,
Yeah.
because even going to market is a different motion today than it was 5 or 10 years ago.
Yeah.
So it's a lot of the preconceived notions from that era are out the window right now. And it really, for me, it's really about, it's truly early stage. It's, whether it's pre-revenue or not isn't really the story, but the more revenue they have, the less they need angels, the less they need this kind of help
Yeah.
to get out to their seed or their A.
But it's also
Um,
proving a go to market if they even have some of that, or if they even had the conversation. Sometimes, like, we see people with these ideas and they had built like a product, and we see the product. We're like, oh, that's cool. Have
yeah,
you talked to anybody about buying this or using it?
yeah,
And you're like, oh no. And you're like, well, maybe do some of that. But again, that's the level of what we're saying. We're not talking about somebody who's like they're already doing 5 million revenue and they've been doing this for 3 years. That's an
right,
A round, a B round, C round. So we're going, pre-seed before any of those from that standpoint. But again, we want to see product. And you and I both take a look at a lot of and talk to a lot of startups. I had a guy the other day that I looked at, and like within 30 days, he launched an AI screener by himself, building it. Now, again, techie guy, and it was pretty lightweight, but it was functional, right? And so
yeah,
you're like, look, so that's kind of what we have to do from that standpoint. Um, Another big question, and this goes a little bit to people. I think most people understand kind of venture capital investing, but a lot of people don't. And that's obviously one of the founding things we wanted to do too was educate not only
yeah,
ourselves, but the 100 around this. I get, well, how do I get my money out? If I give you $10,000 and then 3 months from now, I got to pay rent and I need that 10 grand back. Like, how do I get that? You're like, that's not what this is. You're not buying a stock that you can sell. This is an investment where we are going to take this money in. We are going to invest this money into companies. And many times it takes 3 to 7 years for that investment to really functionally work, right?
yeah,
Turn into something from that standpoint. But it begs the question, how do exits work if on this? Because people hear all the time, like, oh, if you invested $1 million in Uber, back 10 years ago, you would be worth $3 billion today, blah, 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 whatever. So there's a traditional exit, which is like, hey, we invest $100,000 into a company. 3 years from now, another bigger company, Workday comes in and buys this startup for $10 million, right? And for whatever percentage we negotiated for our angel investment, we would take that money out, and then everybody owns 1% would get a 1% share of that money back.
yeah,
That's a traditional exit. We also there's seed buyouts. So we're an angel. So we might own 10% of this company as an angel. And then all of a sudden, Acadia and our friend Jason comes in and says, hey, we're going to invest $5 million because this company is so great, but we want to clear the cap table. We want
right,
you 100 idiots, the ones that were so smart to invest early, off the table, and they're going to buy us out of that 10%. Again, then we would pay everybody out, that 1% share of each, that they would get. PEs come in and they buy a lot of startups as well.
yep,
That's kind of a traditional exit because you're being bought. And then sometimes, like the last way I can think of would be even a founder buyback. Sometimes these companies are doing pretty well. They're not having to
yep,
take additional investment. They're making money, and they might want to clear the table themselves. Again, getting ready for a bigger kind of investment
yep,
or whatever, right? And so, same thing. Whatever money we would get would go to the 100 in equal shares. From that standpoint.
yeah, yeah. I think that's, you've done a good job of laying out all the, I would call all of those positive outcomes.
All
And
positive outcomes.
yeah, and those,
So,
but the time that is exactly what everything I see, everything I
yeah,
read, it's like 3 would be pretty quick, 3 years, 5 would be kind of average, could be 7. And the reason it's called venture is because it could be 0.
could be zero.
And, many of us have read the articles, you can go to Carta, and they've got stats on all of this. Like
Mhm.
the VC model is like 10% of the portfolio covers the 90% that doesn't perform. Now, some VCs do better than that. I think our thesis is that this group that we're putting together should be able to pick some winners, but there's no guarantee on that. We're all in this together, and I
Yes.
hope our thesis is right. But
It gets back to the philosophy. I mean, every one of these founders has to choose if they want to take investment and who they choose to take investment from.
right,
Some have more choices than others. And what we're saying is because we have 100 great people within our community that knows what's going on, we should be able to help better than anybody else, right? Especially there's so many VC companies that come in HR tech that have no idea what HR is. And they're just giving some money and then they're like, they really can't help those founders. We think we have this advantage to kind of help people and choose those. I'll share my own personal, because I've done a lot of angel investing in the last kind of 10 years in the space. I've had one really, really successful exit. If I take that out of the mix and I take all the other investments I've done, it's a 2x return. I'm doubling my money. Now again, I have one really good one that makes it, worthwhile, but that's kind of traditional angel investing. It's like you're hoping for that 100x or that 25x or whatever. But the reality is and again, you can pull this data up from Carta, from AngelList, from wherever, go on to, open or, chat GPT and ask the question. A normal angel fund on average across all the angel funds is probably a 2x return on average.
yeah,
And people go,
yeah,
well, wait a minute, then why would I invest? I could go into the S&P and put that $10,000 and probably do better over time. You could, but you also don't have that 100x opportunity for the most part, right? Or whatever
right,
that might be. And for us, because that the other piece of I think that people have to understand, most venture capital wouldn't even talk to you for $10,000. They would laugh. In fact, you and I reached out to a lot of venture capital funds going, please run this fund for us. We want to do this thing. And they said, no, you guys are crazy.
the
Um,
million wasn't worth it for them.
the million wasn't worth it, but having 100 people at 10,000. So it's not lost on us that 10,000 is actually a big piece of money for almost everybody that's here. That's not lost. But in the venture capital world, that is a tiny figure that most people don't want to deal with. But we wanted to make it accessible for so many other people that traditionally couldn't become a part of a venture capital fund and be an angel investor,
Yeah,
right? Most angel investors start at 250, 500, $1 million. Some I've been offered funds to come in and like, oh, our minimum's 5 million. And I'm like, you're talking to the wrong dude.
I think there's that, and there's also the um, we're there aren't enough early stage funds
Yes.
in our space, and it's about our space.
Yeah.
So this is not there's risk involved here. This is an investment, but there is a big part of this that is we're doing something for our space and
Talk
for the
about that.
founders committed to our
Because you
space.
follow this data on a quarterly basis and you've seen over the last 18 months how bad this has gotten for angels. Like talk about that data a little bit in terms of what you're seeing.
Yeah. It's really interesting because you have to be able to hold these two truths at the same time. One is it's gotten really hard. And back to the conversation about revenue and about product and about what's happening in the market with AI, you've got to have a really tight story. You've got to, that's why I think you've got to have product. You've got to have even some kind of traction. That traction could be your pipeline that you haven't converted yet or what have you. But all of that is hard. That's hard for an early stage startup. So the first truth is it's getting harder, but at the same time, the world is getting wider. So it's
Mhm.
like there hasn't been a huge decline globally in what's coming in at a pre-seed or seed stage in our market, but it's just that now I'm seeing it in Hungary and in countries that just didn't
Latin
pop onto
America,
my
there's been some
yeah.
really great
Oh,
investments. It looks like people are more and more bigger pieces of money are funneling into winners. So you see that like the B, C stages are getting some
yeah,
really big ones. So the money itself overall isn't necessarily low, but you see fewer bigger investments instead of these littler investments happening
right.
from that,
And
which again
categoric. Yeah, sorry.
gives us a huge advantage because we can go out and cherry pick really some really great angels that are out there that aren't getting the money for a
Yeah.
better price, right?
Yeah. And the categorically, when you go dig down, like when you look at talent acquisition, that's the category in the overall HR tech space that has been really hit hard because those generic, not generalized investors,
Yeah.
um, they see the job market, they see the headlines, they see the economy, and they go, oh, everything in talent acquisition is a bad idea right now.
And you're
And
like, gosh, no, there's a transformation happening in
yeah,
how people get
yeah.
hired.
And some of those providers, not everybody's doing poorly right now, and it's
Yeah.
about who their ideal customer is, it's about where they are, it's about their approach, it's about their product, it's about their
Yeah.
message. And I think there's an opportunity for folks who understand the market to pick some of those. It's also, this has always been true. It's even in a good market when the money's flowing, there's the old boys network, and you're not in San Francisco, you're not in Silicon Valley, you're not a stone's throw from Sand Hill Road. They don't see you sipping your latte in your Patagonia vest and
Yeah.
feel like you're
Yeah.
symbiotic, so you're like, there are a lot of folks who just, they have great products and great ideas, they always have, and they just can't break through. And we're more accessible. We're just more accessible.
We're more accessible. And what we've seen already in some early investors too is I think our fund will be more female dominated than probably most funds because
Yeah,
HR community is mostly female. We're going to see a lot of that. I think we'll be a very diverse fund when it's all said and done and we have our 100 ready to go. Last thing we want to talk about was our partnership with PIN from the technology
yeah,
standpoint. We've talked about Carta and AngelList. Those are two big VC kind of fun like technologies, right? So there's a lot of reasons why you partner with a technology for this kind of funding. Compliance, tax, fiduciary. There's so much involved. It's a safety net for you and I, and for every one of those investors. Is that we've really worked and found somebody that understands what we're trying to do. Technically, within the industry, this is an investment club
yeah, yeah,
because there's 100 of us pooling our money together to do this. There's a voting mechanism, but everybody should feel really good when you go through the process of registering to become one of these 100. You're going to see a lot of documentation, a lot of stuff that you're going to have to read through. You're going to, oh my gosh, there's so much here. That's a good thing. It means that we're compliant. It means that we're the right fiduciary partnership with PIN. Also, what I love about PIN, female founder from Harvard, who founded it because, like you and I, we went to Carta, we went to AngelList, and they're like, we don't want to work with you guys. You're too small. She had the same thing happen to her. And so she made her own technology for people like us. So it fits perfectly. I'm super happy with what we've been able to do with them. And I'm excited to move forward with that.
yeah, yeah. It's all of that is so important. From our side, when we first started talking about this, I was saying, I tried to do a syndicate before, and it's like, it's very disorganized. And while the platforms keep you compliant, there's so much just overhead and cycle time, and like getting everybody together and then getting all the money. And this is very, very tight, very
Yeah.
organized, very transparent. And like you talked about those expenses and things, that's all PIN basically
Yeah.
for us. There's
So
no,
it's super transparent. Like
yeah,
that's what I love about it too, is you're going to be able to follow these investments. You're going to be able to see every single expense that's there as an investor. There's nothing hidden. There's not like, well, what's this miscellaneous for $1,000? Like, oh, Tim and George had a really great dinner. Like, no, there's none of that. Um, that initial conversation, you and I went worst case scenario. Like we were like, wait a minute, do we want to get involved? Because we don't want to be sued. Like we're just trying to do something good for the industry. And so again, we had to find a really great structure that was like, no, we want to make sure that we're compliant and that we can provide all the tax things that have to be provided. But we can't do that personally. So again, this partnership with PIN has been, paramount for us to protect everybody involved.
yeah, yeah, 100%. Yeah,
Well, cool. George, we wanted to put this video out because we had these questions. These were the main ones that came through. You and I are both open. All of our stuff's out there on the website. If people have questions, if somebody sees this and goes, wait a minute, how do I want to get involved? I want to be one of the 100. It's first come, first serve. We're not saving any spots for anybody. Um, and so, let us know, reach out to George and I, we can get an invitation sent to you. There's a process that you go through. One of the questions that you'll be asked is if you're a certified investor.
Mhm.
People go like, "Why? I'm not." You're like, "Well, it's kind of you self-assess if you're a certified investor, and they'll give you there's like 5 criteria. It's like, do you own your own home, or do you have so much money net worth wise, blah
Yep.
blah blah. You can make those own determinations. No one, there's no like IRS person that's coming back going, "Hey, you checked here that you had $100,000 in net income, blah blah blah, whatever." This is just what it's really set up. When you call yourself a certified investor, they want to make sure you're educated.
Right.
Again, one of the reasons why we put videos out, but also there's so much information on the pin side as well. Otherwise, it kind of just goes through. You'll go through they'll give you the wire instructions on how to send money, and you'll be able
Yep.
to follow through the entire process in terms of how that happens. You'll have access to the platform. You'll get to see the other investors that are out there, things of that sort. So it's very cool. Again, our information's out there. If you want to be a part of it, reach out to us. If you have questions, reach out to us, either George or I. We can get you that. Our goal is by HR Tech 2025 in September, we'll be fully invested. We would love to even be able to announce our first angel at that time.
Yep.
We're going to be working very hard over the next 2 months to make that happen. So,
Yeah. Yeah. Looking forward to it. Uh, I think it's a great opportunity for the industry.
yeah.
Looking forward to getting this wrapped up, and it'll be a fun HR Tech.
All right. Thanks, George.
Thank you.